Well, like other miners, BHP Billiton has benefited from a rebound in global metal prices. It reported full-year net profit of $5.8 billion on Tuesday after a record $6.3 billion loss the year before. The world's largest miner also announced it's selling its US shale assets, although the company describes its shale business as non-core. Reports suggest it is bowing to pressure from its shareholders, including billionaire Paul Singer's Elliot advisors, to offload the underperforming unit. The Anglo-Australian miner bought those oil and gas assets in 2011 for $20 billion. That was at the peak of the fracking boom when oil prices were above $100 per barrel. But after prices crashed in 2014, the miner wrote down the value of its shale assets by more than $7 billion last year. This year, BHP chairman Jack Nasser admitted the initial investment was a mistake. When those shares are sold, analysts suggest BHP could recoup up to $10 billion, half of what it paid for them. Well, for more on the state of the US shale oil market, Miswin Mahesh is an oil analyst at research consultancy Energy Aspects, and he joins me now from London. Miswin, looking at the state of global US shale oil prices, should this move have come sooner?
I would say there's a combination of factors driving the market. It's just not US shale. There is a lot more happening here in the North Sea, as well as in Asia in terms of demand. And all of those factors have sort of meshed up together to pull prices where they are at the moment.
Now, there are reports US shale oil output is expected to rise by 6 million barrels a day over the next couple of months. Is this likely?
It is very much likely, given where we are in terms of prices, in terms of where we are in terms of the hedging cycle as well. But we do think that elsewhere, ex-US, the supply system is increasingly showing a lot of weakness, and that's helping to balance the market. Inventories are drawing down, both crude and products. We're we're sort of getting to levels which are prompting the steep contango that we've had to fall as well. So that's definitely a good sign.
What do you see as being some of the major challenges facing US shale, and what could be making investors uneasy?
I think the flat price itself for oil, given how, even though underlying fundamentals have tightened, prices haven't really surged higher, is a cause of concern, especially with where break-evens are, especially with where a lot of the companies are not really free cash flow positive as well. So those concerns are very much there. The investor community thus far has bankrolled the expansion, but now they're taking a more careful look to see if oil prices could be lower for longer. And I think that's the big challenge for producers at this stage.
Now, oil prices have been hovering around $50 per barrel mark. Where do you see prices heading by the end of the year?
We do see prices edging higher, but it will be a very slow process, given how the market's still very skeptical about, A, in terms of how fast the tightening process can take place in terms of inventories, and B, also in terms of the response mechanism of US shale, as well as what the end game is for OPEC when its deal sort of expires at the end of March next year.
Well, that was oil analyst Miswin Mahesh from Energy Aspects speaking to us from London.